December 10th, 2025, a full-day washout tactics, a 5-stage script of how the market collected chips. Hello everyone, I'm Insider Lin. What I'm showing you today is the December 10th market, one of the cleanest and most classic full-day washout patterns. If you only look at the candles going up and down, you will feel bored, confused, and frustrated. But if you understand the rhythm behind the market, you will realize. From beginning to end, it was collecting chips and harvesting traders, without wasting a single minute. Today, I break the entire 12/10 script into 5 stages. After watching this, you will understand the rhythm of a washout more clearly. In the future, you will judge the market correctly instead of being harvested by it. Stage 100:0006:00. Midnight sideways grind, the market builds its first layer of bottom chips. What do you see? Short candles, long wicks. 5 MA and 10 MA tangled together. Price moving in tiny ranges. This is static accumulation. The market is not rushing to push up, and not rushing to push down. It is simply absorbing all the volume thrown away by inexperienced traders. You may think, why is nothing moving? But from the market's perspective, the less it moves, the cheaper I can accumulate comfortably. That forms the first layer of chips. Stage 206:0001:30. Second overnight consolidation, fake breakouts, fake breakdowns, washing out short-term opportunists. Corresponds to the chart near 125 on December 11th. This segment is even clearer. Look at it. Price keeps shaking inside a tight narrow band. Sometimes a red candle looks like a breakout. Then suddenly a long green candle slams it down. This is dynamic washout. Its purpose is simple. Wash out early buyers who thought it was about to surge. Wash out early sellers who thought it was about to collapse. The market is not choosing direction here. It is washing out everyone who tries to predict the next step. Stage 301:30:08:30. Final overnight market launches the real move. Corresponds to the big circle with the fake dip to 4,182.40. This is the key part. Around 130 to 140. You see a long lower wick at 4,182.40. This wick means 3 things. The market is testing the bottom. It shakes out everyone trying to catch an early rebound. After triggering all the stop losses, it lifts the price easily. What follows is 4182 for 1,248 main upward move. This move is not for retail traders to make money. It is the market expanding the chips accumulated from the first 2 stages. This surge happens when the whole market is scared, hesitant, and heavily damaged. That is exactly when the market strikes. Stage 408:30:10:00. Post-rally oscillation, lure long squeeze shorts wash out the chase buyers. Corresponds to the morning chart around the 4,248 swings. The 42-48 area is where the market loves to perform. Because people who see the surge will chase long. Shorts who are trapped will cover. Early morning traders will add positions impulsively. So the market performs. One big upward candle breaking 42.48. Immediately a long bearish candle. A bounce to 42.45. Then a drop back to 42.30. You may think this is a reversal. It isn't. This is killing chase longs plus washing shorts that still haven't exited. The goal is simple. Turn all short-term longs above 4,240 into trapped positions. The cleaner this washout is, the lighter the chips become. Stage 510:00-12:00. The most important segment, 4,248, 4,220, 4,210 net closing washout. Corresponds to the final charts, 42.20, 42.12, 42.10. This part is beautiful. You see price going down step by step, like stairs. Every rebound is weak. 5 MA and 10 MA press down the entire time. Finally taps the 4210 to 4212 area. This is not a crash. This is reverse net closing profit taking. Purpose: wash out all buyers who chased the 4248 morning high. Allow shorts who didn't cover earlier to cover cheaper. Clear all floating chips from yesterday's 4180 to 4220 zone. And notice: every time price reaches 4210 to 4220, there is clear support. This means the market never intended to truly dump. It is killing high longs, collecting low longs, clearing floating chips. Volume is being eaten bit by bit. This is a textbook large range washout preparing for the next move. Final summary. On December 10th, the market spent a full 23 hours doing just one thing. No direction, only washout. 3 sentences summarize the entire day. Downward moves fail because the market is accumulating. Upward moves fail because the market is washing longs. All sharp moves, up or down, exist only to clear wrong positions. This type of market is not for making huge profits. It teaches you how to read the rhythm of patient accumulation. Once you understand today's pattern, you'll recognize that real big moves are often born from this kind of long, suffocating washout.